Hi, welcome to the Market Alert for Monday, the 12th of September 2022. So stocks saw on biggest squeeze in 5 months again as Hawknado deepens yield curve inversion. Jay Powell is not going to be happy, so he's going to be raising rates again. And I think it's a week on Wednesday. We've got the CPI this Wednesday from the Fed, from the US government, and then the Fed's reaction. Stocks close the week at high despite hawkishness again. Recession signals abound as Fed hikes rates. Yeah, they're going to keep doing that. US household net worth crashed by the most in quarter two against the background of strongest economy ever. Yeah, question mark. Not quite. And economic news for today. Let's have a look. We've got a UK GDP today and a lot of other low impact items there. I'm just seeing if there's anything from the US. Nothing there. But if we go through the week, we've got the CPI. Oh, it's tomorrow, not Wednesday. So US tomorrow, CPI, and also then UK CPI on Wednesday as well. And RPI, of course, leading the way there as well. But they're forecasting the same as before, which will be interesting to see. No interest rate rise this week, so it's going to be next week for the US. So there we go. So actually we've had a month of the UK CPI numbers, or in between, where Powell I don't think has raised rate. Not Powell, Bailey hasn't raised rates. So about time he played catch up with raising rates if he wants to stop the inflation rate from going to the forecasted 18% by Christmas. Gold silver ratio, well, there's a surprise, being allowed to move higher quickly or more quickly than gold, and that's put pressure on the gold silver ratio. So that dropping down to 90 from a high of 96, so you're getting less silver coins now per ounce of gold, as can be seen there. But markets for Friday, we continue to move to the upside. As I said on Friday in the alert, there was nothing to stop the market from moving higher. And you can see there that the market has traded up to the 50 bar moving average there. And from here down to here, you will see the market is at 89% retracement now as well from the last area that was left behind. We'll just remove this one and go to here, down to here. You will see that we've got a 50% retracement with the 50 EMA from the high there projected back. So there's a bit of resistance there, a bit of a dead cat bounce going on here at the moment. 30-minute chart, well, again, it was straight up from the off in the cash market as it opened. Also that we've got a gap here as well overnight. The market's gapped higher, and I don't know why, because the news that's out is not good news at all. Ukraine plunged into darkness, and more about the war making the headlines on zero hedge. Market has come down and filled the gap, but found support at the close at the moment. So going back to the daily charts, the 50 fib there and the 50 EMA is very important that the market closes back above this. If not, you're likely to see prices retracing down to test that 5 bar moving average. Like I say, there's no real major news out today for the US, so we'll just have to wait and see. In the German DAX, different picture. This is moving to the upside, which is quite odd given the fact that Ukraine is on the doorstep. Let me just pull that up for you and just show you what's going on. So yeah, here you go. You've got Ukraine's second largest city plunged into total darkness as Russia strikes key infrastructure. So we've seen an attack overnight and during yesterday evening, and yet the DAX is moving higher there. Look at that in the 30-minute chart and you'll see what I mean. It continues again like the Dow. We had a bit of a gap, but this hasn't filled the gap yet. It continues to move to the upside above Friday's high, which is most odd given the fact that there's a strike being made against Ukraine. The whole world's upside down, isn't it, with its thinking. So there you go. You can see that the DAX is quite strong. Watch the high if you get a retracement. later on in the morning, but at the moment, as you look at the 30-minute and the daily chart, the market continues to move higher. I'll just draw in some fibs here from this high down to the recent low, and you'll see we're at 78% there. 89 is just above that with the 50 EMA there, which you want to keep an eye on should prices move to this level. Again, there's nothing on the news or in the news, is there, today that's really going to move the market, apart from we've got this GDP for the UK, and that's month on month. But other than that, there is nothing from the US except the 10-year bond auction there. So again, there's nothing to stop the market from continuing its move to the upside, except all I would say is that we've had several up days and the market is due for a bit of a breather, even if it is just for one day. And the 5-minute chart, there you can see that gap a bit more clearly where the market's gapped up. We've not filled this gap yet. That gap sits down at Friday's high. And speaking of Friday, there's the activity for Friday. As I said in the alert, there was nothing to stop the market from moving higher, and that's all it did from the off. We had 100 points there, 200 points before it eventually gave way and then traded sideways throughout the remainder of the day. If we have a look at the results from last week, for the week, 518.01, 7.66 for the profit factor, and we had 73 to 27 there for win-loss ratio. The total from the 19th of January continues to move higher as well. We're at 28,252 profits, 2.33 in profit factor, and we have 55 to 45 win-to-loss ratio over this period. And in the S&P, also moving to the upside, showing a bit of weakness there as well. As you can see, stuck at 62% retracement at the 20-bar moving average, starting to move back. We've got the 50 EMA at the 50% retracement there as well. Overnight, you can see we've also got the gap in the 30-minute chart, with prices having filled that gap. It's just the DAX that hasn't, so the market needs to get back above this high, and then we've got the high to the left there as well that was made overnight. So that's the overnight high, that's Friday's high there. In the FTSE 100, also back at the 200 MA, 20-bar moving average, and just through the 50 there. And if we go from here to here, you'll see that we're at 78% retracement also at these levels. So we could see a bit of a pullback in this market. But if we have a look at the 30-minute chart, you'll see the market's holding quite nicely. Again, on Friday, we had a big move, traded sideways till lunchtime. We had a nice retracement there, and then we saw the market move back to the upside. We got to get it back above this high, which we have traded above. We actually opened above the high overnight, but the market has come back below this, so showing a bit of weakness there for the FTSE 100. And in the currencies, the yen moving to the upside there, stuck at this resistance area that we've got here at 166314. Market needs to break through this, and then you've got these other areas of resistance as well that will need to be taken out. If the 166 area is taken out, then you want to draw from this high down to this low, and you'll see you've got 89 and 78 tying in with these areas as well. It's amazing how this happens. But overnight, you can see the yen has moved strongly in Asian trading up to Friday's high, which was there. Friday, you saw the market move lower and then try and make its way back after the morning period there and into the evening, which is continued over the Asian trading on Sunday night. The the pound, you can see there up on Friday, down on the overnight as well. The dollar finding a bit of support overnight as well. So the pound coming off that 114 level that we've looked at for a long time. You can see they're bouncing off this area at the moment. And the 30-minute chart, you can see prices moving up in the pre-market on Friday, continuing this only slightly for 50 points before retracing to Thursday's high, and then Friday the remainder of it trading sideways. Again, market's gapped higher, Hasn't quite filled the gap yet because it hasn't traded down to here. Again, watch the close, watch the 115 level as well, which is the red line there. If it comes through there, you've got the 50 EMA there as well. On the upside, you've got Friday's high that will need to be taken out, but that will mean you'll need to see some sort of weakness in the dollar. But don't forget, we've got the GDP figures at 7 a.m, which will impact on the pound. And finally, in the metals, you can see that silver has been allowed to move up there. It's moved for the last few days, so it must be due for a bit of a hammering. We've traded up to, between the 78 and 62 level there, haven't we? We're back above the 20 bar moving average, way above the 5, but the market is due for a bit of a correction there, and we just hit the overbought area. 30-minute chart, you can see on Friday the market slammed, but then coming back, and overnight, again because of the headlines about Ukraine, this has moved the metals markets to the upside slightly, but now struggling with the high, which you can see there. In gold, hasn't moved as much on the upside, has it? You can see there you've got more red bars in the move, more sideways, only a 50% retracement, whereas the silver market, as we've just seen, has traded up to 78% of its recent down move, and that's why you've seen the gold-silver ratio more or less drop considerably from that 96 to 90. 30 minutes sideways, you can see there the move down in the gold market on Friday is far bigger than the silver market, hence that increase. Interestingly though, the gold market is now sitting at the 200 MA in the 30-minute chart and finding a bit of support there. And the dollar, which is rolled over to the December contract, Z is the December contract, you will see that price is finding a bit of support there in an attempt to move higher. And given the fact that the contract has rolled over, then that's no surprise that we see Friday moving lower, because the longs would have liquidated, rolled over to December. So these are the upside targets for the dollar to move back to the upside. And finally, in crude oil, sideways, they're stuck in a range way below the $100 per barrel per level at the moment, which is good news. Okay, let's call it a day on this one, so I can get this to you before the GDP figures come out for the UK. And with that, as ever, thanks for watching. See you in the next one.